Good afternoon. This is Melissa with the StockSwoosh.com, and today I wanted to do a market review. It's Monday, March 11th, start to the week here in March on a Monday, an interesting start to the week. Let's just take a look at the market. I was thinking about studying the market over the weekend. I said, I'm just going to wait until Monday and see how we close, and we're 11 minutes away from closing here, so this is really where we're going to probably close at now. Interesting day. I really felt that the market had the potential to come in and retest this area today, which would not have been a big pull-in, a little pull-in. This is 68.20. At one point today, we were red in the morning. Small red bar was a tiny, tiny, tiny red bar. And I thought we would actually come down here. We did not do it. As it turns out, we went under the low from Friday. 68.50 was the low. We booped under by 3 pennies and immediately lifted up. Let's just see what time of the day we did that. Hold on. We did that at 11 o'clock. There it is. Touchdown, 3 pennies under Friday's low at 10:45, and at 11 o'clock did a 15-minute buy setup. This is a terrible buy setup, though, by the way, so I would not have told anyone to buy it. This one here looks a little bit better going into 1 o'clock. Still wouldn't have had conviction this is going to go green, that we were going to go green on the day. But then we finally did it when we touched down here at 2:30 and bounced. It's really interesting. Been looking at the afternoon reversal times. We've been getting moves at 2:30. It has never before been noticeable to me till recently, just this year, just in the last 2 months, that we have been getting lifts or drops into late day moves like 2:30, 2:45, 3 o'clock, 3:15, 3:30. Late. That's late. Okay, to get in a play, unless you're already in it. All right. Or a noticeable new direction, whether it's up or down. And I've noticed that this year, so I've been studying charts. So it's interesting. Anyways, we did have a lift in here. We had a lift all the way up, and we rallied into this 2:45 time frame and continued then. Now looks like we're going to close green. And this morning at one point, we were red. We dropped in the open and came in. I never thought we'd go big hard red today. I thought we'd come into here, but we didn't do it. So the reality is that the market is holding this bullish gap that happened last week on the 5th bullishly. The market's holding. Remember, I said 3 green bars in a row, which we hadn't had in ages. We did have last week. We went over this a little bit and then came right in this day. I felt that that was bearish. And we broke out a little bit above this on Friday and didn't go anywhere. That I felt was bearish. But the fact is we're holding bullishly today. We are holding the gap. That's real. And it looks like the market wants to rally. I mean, the market actually is already over these numbers. 68.55. Let me see what the next area is here. 68.43. We're over that. We're over that. Here. Here. Look. So we certainly could come up here. 69.55. In here is 69.20. Are we anywhere exactly today? 68.72. No, we're over that too. We're right in this messy mess. Do you see that right now where we're trading? We're trading right in that mess. It's this 1, 2, 3, 4, 5, 6, 7 days of trading here. No, 8, 9, 10, 11. There's a lot of congestion here. There's 11 days worth of congestion trading in here. Right in here, which is why that's exactly why we're having trouble getting anywhere. I see that now. Look, all of this in here is congestion. It's what I call price congestion, and that's why we're having a hard time kind of lifting off of it or coming in, but it appears we want to push off of it, but that's why it's kind of taken a couple of days. That's why it's kind of taken a couple of days. It's also taken a couple of days because we had a rally here, a gap up, and then a rally here, and it's holding. And it just is taking some time to lift off. But I do think we follow through bullishly tomorrow, now that we close like this, unless for some reason we get down. Unless we get down tomorrow, we're going to have a bullish day tomorrow. And we're just having a hard time because of this. And tomorrow, if we can move up past these bars here, of which 69.20, 69.25 is only 25, 30 cents away. As soon as we can get over this set of bars here, 69.30, 69.33. Yep, that's the number. 69.25, 69.33. As soon as we can get over these people here, we should be clear to trade up to here. And then after that, I don't know. I actually think if we trade above these little bars here and get up to here, will trade up to here and make new highs, which would be very bullish. Very bullish. So as it turns out, I read the market very, very correctly in here for the first 2 months, and we fell in hard here then in February, and hard in here again, and hard in here again, and this was the end of the month. Then I thought we would retest this number in here, 65.70, before the market rallied back. We didn't do it. We never actually got to the number 65.70. We got down to 65.96. I wanted to see 65.70. As it turns out, that number now would be actually a little bit below the 200 period moving average of the daily, because the 200 is starting to scoop up. So we're lifting off. If the market wants to break out to new highs, then it's going to do it, and it's going to do it bullishly. And if it does it without retesting the 200 period moving average, then this move is real. There's still a slight chance the market could rally up to some area of resistance up here, or gap down and come back into the 200 here before it actually lifts off and goes up and breaks new highs, or could continue down. The longer that we stay in this range here, I have a feeling that we are going to actually hold and go. And I'm a little surprised because of the drop-off, the hard drop-off we had in here at the end of the month in February. But buying did come in. Buying did come in. That's what created these green days, these 3 green days we had in a row. After we had them, I said, okay, finally now we have 3 green days in a row. What was the sign that that was going to work? The daily sell setup failure here on the 1st of the month, on the 1st of March. This should have continued. It continued into the day. I did call it. I said we're going to trigger our daily sell setup that day. But I thought we'd come down here. We didn't do it. We triggered. We fell hard in the morning on the 1st, and then picked ourselves up and flipped and went green on the day, carried through the next day, and gapped up and followed through green the next day. So this failure of the daily sell setup actually was the moment that the market decided on March 1st that it was going to go higher. And now we'll just see where we go with it. I do think we're probably going to break out to new highs now. I'm looking at the way we're holding here bullishly. Of course, the market could always gap down, and in which case then I will relook at everything in the real-time moment of a gap play, because the market can gap just like stocks gap, which I look at when they gap every morning. But for now, as far as trading back down to the 200, I don't think we're going to do that in a day, in a trade. I think we would have to gap down, and then if we gap down, we might trade down there. But the numbers are going to be different now. And it looked more bearish before this. At this point, then, the bearishness of the market was still intact for the Qs. But then when we fell in the daily sell setup here, that was the liftoff, really, for the market, and it's holding. It's holding strong. Didn't even come in today on the 8, I thought it would. Didn't even come in today on the 8, and I thought it would. So we're looking like we might go higher. That's fine for me. I'm still going to do everything I do, playing my gaps beautifully. And you know, look at DKS today. That was the only thing I was watching this morning for a new gap, and it played out. And I even got the continuation on Foot Locker this morning too. So I'm going to continue to do what I do with my strategy, even in a bullish market. I mean, I created my strategy in a bullish market. So the reality is I created a bearish gap 26-point rating system from 2008 to 2010 into 2011 during the time when the market was running up. So if the market can rally up to brand new highs and break that and make new highs, and I'm still going to keep shorting stocks and doing my 26-point rating system successfully, as I've been doing for the last several years. So for those of you that like to go long, do it, and do it with conviction. If we break above these little tiny bars here, follow it through. The brand new high number here up here is 70.58. And if it goes through it, then we're bullish. We're stuck right now in this congestion right here. It's got to break above 68.25, 68.30, 69.25, 69.30 in order to push through it. And I think if we do, we'll have no problem breaking out over the highs over here. No problem doing it at all. Just whether or not we're going to do it tomorrow. But we look pretty close to doing that. It's 30 cents away. So if you're interested, I'm doing a trading room open house. It's actually, my trading room has a new name now. It's called the Stock Swoosh Show. And if you're interested in coming to the open house this week, then contact me at melissa@thestockswoosh.com. You can feel free to go to my YouTube site for the link and the password for the room to come by and stop by. It's March 13th, 14th, and 15th. And I'll be doing lectures during the time in the room and afterwards on different topics during the day. It is always interesting to be to be with me during the trading day. I do a lot of talking and teaching. And of course, I trade and trade gaps every single morning on the open. And I read the market at 8 o'clock when I get out of bed too. The market has been holding now for the last few days ever since the gap up on the 5th. So expect continuation now, at least till tomorrow, to go green. Unless the market gaps down, I think it's going to follow through in this rally. So let it play out. I'm going to continue doing what I do. Those of you that like to go long, you should already be in. All right, if you're in swing core trades or anything else, you should already be in. The aggressive entry was this failure on the daily sell setup back here in the first, but you could have gone long here on this gap. You could have done it, or when it broke above these bars. It's a little late to be getting in now if you want to go long. So this is Melissa with thestockswoosh.com. If you're interested in more information on the Stock Swoosh Show, live trading room, or my gap class. I teach a gap class. The next one is March 23rd and 24th. My email is melissa@thestockswoosh.com. Thanks, everybody, and have a great day.